purchasing a new home or refinancing an existing home loan, you hear that lenders will talk a lot about loan-to-value ratio, or better known as LVR. In today's video, I'm interviewing Sarah Moore, a home loan specialist here at Lendy, to explain exactly what LVR is, how it is calculated, and why it is better to aim to have a low LVR. Welcome, Sarah.
Hi, thanks for having me.
Let's start with the basics. What is loan-to-value ratio and how is it calculated, Sarah?
So LVR is calculated by dividing your loan amount by the value of the property and then multiplying it by 100. So to give you an example, if you took out a $500,000 loan and the house was worth $600,000, then your LVR would be 83%. So it'd be 500 divided by 600, which is 83%. So a borrower's LVR is hugely important to lenders. It can impact the rate that they'll qualify for, as well as the amount the lender is willing to lend you.
Okay, and someone with a lower LVR would probably be deemed a lower risk by lenders. So it's always better to have a lower LVR. Is that correct, Sarah?
Yeah, so borrowers with a low LVR are less in debt and are considered a lower risk by lenders. So the lower that your LVR is, the more equity you hold within the property and the better likelihood of being offered a lower rate and being approved for that home loan or refinance generally. So generally an LVR above 80% is considered a higher risk by lenders, and you may be required to pay lender's mortgage insurance, or otherwise known as LMI. This is an additional fee that gets capitalised to the loan and is paid off over the life of the loan. It protects the lender against the risk of the borrower defaulting.
Interesting. And we've actually covered LMI in full detail. So if you guys actually want some more clarification around this, we've linked it in the description below. So Sarah, what is the LVR that people should aim for when they're looking to refinance or get a home loan?
So generally it's 80%, but there are lots of lenders that offer loans to borrowers with a high LVR. This really all depends on your lender, as well as the specifics of your financial situation, employment history, and credit rating.
So what's your best advice for those who are looking to lower their LVR to less than 80%?
So the first way to lower your LVR is to simply wait and try to save for a larger deposit. Another option is to buy a property with a lower purchase price, which will ultimately reduce your LVR. And a third option is to ask a guarantor, so usually a parent or a close family member, to use some of the equity in their home to secure a part of the loan. So you can chat to a mortgage broker to discuss that option a bit further.
Fantastic. And you can certainly speak to one of our home loan specialists here at Lendy as well, who would be happy to help you in your journey to get a home loan. If you're looking for more information on how much deposit you need to buy a property in Australia, check out our video here where we will break down the 7 key things you need to know about saving for a deposit. We've also linked in the description a free access to our LMI calculator and figure out whether you might have to pay this fee. Thanks Sarah again for being here today, and we'll see you guys in the video next time.